Thank you everyone for joining. Today will be the shareholder update. I'm going to give you a quick overview of the events that will take place. So starting, Mark will provide an overview of the financials. After that, I'll pass it off to Rob, where he will review the company, talk a little bit more about some of the events that have happened, and also the roadmap. We'll then open up the floor for a Q&A session. This Q&A session will be a combination of pre-submitted questions from over the weekend, as well as questions submitted through this chat. So if you'd like to do so, you can click the Q&A button below and fill in your question there, and they will be grouped together and asked to both Rob and Mark at the end to go into a little bit more detail about those questions. This meeting will be recorded, so it'll be available on the Fobi.ai website later. So we'll start off. Welcome to the chat. So today, the people will be, people talking today will be Rob Anson, CEO, and Mark Lotz. I'm going to start with you, Mark, if you would like to give us an overview of the financials.
Sure. Thank you. Hello, everyone. Thanks for joining. We appreciate your interest, and we're very pleased to see this level of participation. So I'll start with an overview of the consolidated statement of financial position. First, it's noticeable that the cash has increased by 7.3 million. We have cash on hand at 7.5 million at June 30th. Our overall current assets situation is improved substantially. Our accounts receivable is down 232,000, and what does remain, some 844, is due from the government of Canada and has been confirmed. We have a small prepaid balance of 300 grand and a small amount of loan receivable, which was repaid. That loan was part of the Pass Creator acquisition, and it's subsequently being repaid in full. The equipment has gone up to 122,000. This in conjunction with intangible assets were due to the acquisition of a Pass Creator in the period, as largely a share purchase transaction, and I'll get into that in a second. And that also yielded some goodwill, 1.3 million. So we can talk about the Pass Creator if there's questions. Moving on to the liability section, our accounts payable has been reduced by $1.4 million, and outstanding debentures of 396,000 have been repaid. It took us down from 1.9 million down to 538, substantial improvement to the balance sheet. We have a small amount of deferred revenue from receipts that have been prepaid. I'm just hitting the highlights here, and I'll come to shareholders' equity when we get to the next section. Moving on to the statement of loss and comprehensive loss. This period represented the first real recognition of a revenue, albeit small, 157,000, and expected to grow substantially in Q1. We have some preliminary results having come in just recently from our Pass Creator accountants in Germany, and that would suggest we're on track to get $250,000 in Q1 of 2022. However, getting to where we are today, we incurred advertising expense of $1,059,000, up substantially. Essentially 1.06 million versus 283 in the prior period, an increase of 778,000. Management views this as a critical part of the business model, and this has provided tremendous shareholder value. Consulting is up by 336,000 at $1,111,000, and this is offset by a decrease in wages of 208,000. The rest of the income statement items are in line. I won't speak to them specifically other than compensation. Share-based compensation was up substantially. It's a non-cash item, and it was viewed as critical to retaining and acquiring the talent necessary to complete the business model. As I said earlier, wages are down to 2.3 million versus 2.5 in the past year. So overall net loss, $11 million and 96,000, up substantially from the prior period. I'd say 5.2 of that was share-based compensation, and there was a lot of moving parts in developing, and I'm sure Rob will speak to that in a moment. So that represents on a weighted average shares outstanding of 125. That represents 9 cents a share loss versus 8 cents a share loss in the prior period. I said earlier we'd get to the equity section in share capital. We started the recently completed year with 91 million common shares outstanding. We ended with 134 million. The source of the increase in cash was attributable to shares issued through an overnight offering. We raised 7.424 million. So for 11,621,000 shares, we raised 7.4. We issued common shares for an previously outstanding obligation of 1.2 million. This is largely marketing. The issuance of shares for intellectual property and a business combination, 1.3 million and 166,000. We had a substantial number of warrants exercised in the period, nearly 25 million, yielding 6.487 million in cash. And we had 4 million in stock options exercised, yielding 2.3 million. So altogether, an increase from 91,383 to 134,862. I'll move to the statement of cash flow. Recall we had 11,096,000 loss. We add back depreciation and major non-cash items. Share-based compensation 5.243, and we subtract our application of cash to outstanding liabilities of $1 million. We end up with net cash used in operations of 6.3 million. There was a small allocation of cash to the acquisition of Past Creator. Investing activities used 111,000. The financing activities, shares issued for cash, 8 million, less the issuance cost of 591,000. Our stock options of 1.3, exercise of warrants, 6 million. The repayment of advances and loans, we end up with net cash from investment activities of 13.8 versus 4.051 in the previous period. That's in millions. So we started the year with 174,000 cash and ended up with 7.5 million. I think, Rob, I think I've covered what I needed to carry. Is there anything you need to? Can I pass it on to you, or do you want me to highlight anything else?
No, that's great, Mark. Thanks for the exciting overview. Let's jump in. Obviously, this has been a big year for us as a company of growth. We've seen our team, we've seen our products, we've seen new critical partnerships and evolution now with realization of revenue. I think we're extremely well positioned now, as Mark alluded to, with acquisitions that we have made, investments we have made, to continue progress in our goal to become cash flow positive. And for us as an early stage startup company, we've now built the senior management team. We've got a tremendous board of directors. We've got over the top, passionate group of shareholders for sure. And company is pushing and meeting new milestones, quite frankly, on a daily basis now. And, you know, I understand there's challenges when you're a growing company, and much like the fact that nothing happens as quick as you like. And for us, it's part of the reason why I've always preached that this isn't a trade. This is an investment. This will take time to execute, as we do have a very in-depth, robust product offering and a great opportunity to execute on my vision. If we look back, you know, this time last year, we had just begun to speak about mobile wallet, digital identity. As a result of COVID and agenda driven by government, we've now seen these become daily occurrences and part of our lives. And this is where, for us, we'll continue to be on the forefront of development, pushing new boundaries, blazing new trails. And to me, that's the epitome of what a startup is. We'll never lose that agility. I'm always about new innovation, new collaboration, new ideas, and as I said, blazing new trails. We've seen a great deal of shift from traditional fiat banking to decentralized. Crypto, of course, is a big part of it now. Evolution of blockchain and all the elements that it betters our lives in providing data security and applications, and leveraging all of these new technologies will be a big part of our push towards the end of the year and well into 2022 and beyond. I think for us as a company, we look at each day as it comes. Can't get too wound up, of course, in the highs and the lows. For me, exercising patience and sticking true to our plan is what I intend to do. We look each day to make the best decision possible. Like I said, for me, it's easy to get caught up in all the hype and all the lows, of course, as we see in as a startup. But for us, I'm very proud of the senior executive team that we've been able to put together. That's shown a great deal of confidence to come sit at the table and drive the business and execute on the vision of which I brought to the company and board and, of course, the shareholders. Devin, I'm sure we've got a huge turnout today, and thank you for everyone for making time, and for those that are watching this at home, glad that you can participate in some form or another.
Awesome. Thanks, Rob. So next we'll move over to our question and answer period. So I've taken a list of the questions that have been submitted. You're welcome to keep submitting those questions. Similar questions, I'll be combining them into one question that has a similar topic, just so that we're not answering the same thing over and over. So let's start off. Rob, if you're ready, I'll start off with a heavy hitter one. Can you speak to the recent decline in share price, and what do you intend to do to elevate the valuation by the end of the year?
It's a great question. I think it's the same. You know, I look at where we were twice now. Last fall, when we were 297, I believe it was. I'd say at that point in time, we were way overbought. Much, I would say, things change and progress, the value and performance of the company, the assets in which we've created and being able to acquire, the growth we've seen of various products led us to a high this year, 6 weeks ago or whatever it was now. On the same side, you know, there's shifts in the market. You know, I would love to say every day, you know, success is not generated from a single line up. It's of course healthy to have churn. Of course, there's people that understandably have been shareholders since 7 cents. So there's always profit taking, which is great. I have zero problem with anybody selling at any given time. If you're not happy and you're losing sleep over the company or the daily share price, then there's always an option, and it's to put your shares up for sale. For us, I've given great transparency and visibility to perhaps a fault even. It's one thing I've always been, I've promised is communication, transparency, visibility. That's why I make myself accessible. Some mornings 4 a.m., weekends at 10, 11 p.m. at night to answer some of these hard questions. And for me, I've obviously got a big set of shoulders, and at the end of the day, I take full responsibility for everything. And when I look at the share price and decline now, I think it's a result of several things. As I mentioned, perhaps yes, a little overbought, perhaps profit taking, and perhaps a very strong short position. You're always going to have two sides. You're either betting on failure or you're betting on success. And for me, at the end of the day, I don't get too caught up in daily share price, whether it's with our stock or other investments I have. For me, is the company delivering on milestones? Are we headed in a positive direction? Are we generating revenues? And yes, as we are early stage, of course, the fact of the matter is that we've seen increase now in revenue contracts for the first time. We've been able to give some disclosure and clarity. I think part of where we sit today is, over the weekend here, I believe we're way oversold. And it goes up and it goes down. I don't control the stock price. I wish I did, of course. But, like I said, it's how we deal with things. When there's adversity, for me, it's why I don't get too caught up. And you guys are great. You've done this. And next day I'm getting death threats. So, it is what it is, and it goes with the job. I'm just focused on each day making the best decisions I can. And quite honestly, at the end of the year, the end of the next year, that's where we'll win here.
The next question is about mergers and acquisition. The company has made 3 acquisitions this year. So can you please explain how this has benefited the company, and what can you expect to see in terms of revenue and growth over the next year? Additionally to that question, can we expect any further M&As before the end of the year?
That's a few questions, but let me get through that one. I'll start with the last. Yes, I'm always looking for opportunities. When we look at particular, acquisitions, partners per se, I love to start as a partner if I can, because it gives us the visibility into understanding what's behind the covers, right? It's easy to look like a great story and, it looks like you've got everything there, but until you start working with someone and understanding the intricacies, to see how the operation works, the technology. And then for me, I'm always looking at assessing, is this something we want to continue to partner? Do we want to build it on our own? Is that feasible? And then what does that acquisition cost look like? And what multiple can we bring to these organizations by plugging in our existing core functionality and, of course, network? In the case of PassCreator, we started for many months working as simply partners. When I saw the direction of which Apple and Google were going, and the dedicated resources and funding that was being committed to the digital wallet, for me, it was something that I wanted to pursue. Not only, of course, because that's the way the world is going from a mobile application perspective, but fundamentally, I always want to be in control. When I say in control, I want to control our destiny. I don't want to be dependent upon a partner and their focus or lack of their resources or their speed and agility. I want to ensure that we possess that, we own that, and we can set the pace, which we've done here with PassCreator, and move very, very aggressively into creating a fully integrated product. Now, those don't happen overnight, of course. Those take time, takes obviously resources, as Mark's pointed out. But for us, I look at Pass Creator as being an absolute critical piece of our puzzle. And I'm very happy to see the progression of the full integration now and growing the Pass Creator team and evolving that product even further. And as I said, pushing new boundaries. Pass Creator has been around for 9 years. Outside of Google Pay and Apple Pay, whether it's SEO or whether you look at use cases and projects they've built as a new technology, it's very impressive to see that, because in North America, we're several years behind. A lot of these embedding of verified credentials from driver's license, auto insurance, third-party insurance, these are things that have been done for years and years with Pass Creator. And these are things now that, as we see through government mandates and through Apple and Google driving and enabling these things to happen. So we're well on the forefront of the evolution of digital ID and verified credentials. And for us, this was the reason for Pass Wallet, which I would correct is it's still a pending transaction based on exchange approval that we anticipate to hopefully come to a head in the next couple of weeks. It's the same side once again. It gives us a new opportunity in the fintech sector, which goes with everything that we do when you combine interaction to transaction to mobile ID. So there's a reason behind everything we do. This isn't something that we're out here just cherry picking things for stories or for some form of revenue reporting. This is all, to me, about where we plug into year 2 and now moving into year 3 and building ourselves out a complete network and infrastructure. I'd say Qples is a bit of a different one. I've been familiar with Qples and their past former CEO and founder for 5 years, 6 years, I guess it was, much like early stage when we started this journey with Fobi in the private days. It's an interesting one to me because it was the biggest piece that we've been missing to date, was the credibility of the CPG brands. And for us, the data is great. Data is extremely valuable, but to take it to the next level, part of the reason why I purchased Pass Creator was to give us the ability to activate the data. As the world is, we've seen through e-commerce for years now, the ability now to segment data, which we possess, to activate data on a one-to-one personalized basis is truly game-changing. That doesn't exist to have real-time applications like that and real-time understanding and campaign measurement and performance. And this is a big part of the reason why companies such as Nielsen IQ was so interested in what we were doing, because of the real-time data applications and now activation channels that come with measurement. What am I spending? What are we making? What are we gaining from customer details? And it's all about visibility, much like today's call. I hope that was all 3, or was I missing one?
There's a few questions about a risk, so I'll combine them together. What is the biggest risk the company faces today and for 2022?
Yeah, that's a great question. I think for us, I'll start with last year. Our biggest company risk last year by far and away, of course, was cash flow, operating cash. Number 2, I'd say last year, it was all about the shortage and challenges around supply chain and manufacturing with a lot of the microchips that we utilize in our Fobi device. So I'd say inventory was probably our biggest challenge last year. We were very progressive and proactive with securing those key components. We went through a complete redesign, as you've seen in the Fobi 3.0, to ensure that we had the accessibility and the opportunity to purchase those inventory components that were critical. So I would say we eliminated last year's. I would say for probably this year, moving into 2022, we've addressed a great deal of it, quite frankly, already, and that's shortage of labor. You've seen companies now all over the world, as well as especially in the US, coming to Canada and cherry picking. It's not just the Amazons of the world that come in and set up shop and take away 50,000 jobs, and you know, from us, but it's really now a global crisis, the work shortage. Whatever that may be, whatever reason, there's just not the talent pool out there. So that was a big part of the reason why the last several months, yes, to support the business and you know, the implementations that we're going through right now and that are slated for early next year. But quite honestly, it was about preserving and mitigating these risks that I see is down the road, what can possibly go wrong. I'm always looking to address those now. You know, sometimes talent just finds its way. And I obviously with LinkedIn and other channels, I have a great deal of people that reach out, and we've found some amazing talent, you know, as a result of these different social platforms. You know, direct introductions, of course, through other industry partners. And we've got some tremendous consultants that we've come across that have helped us with recruiting.
Can you speak to what has happened with Euclips?
Euclips, that's my favorite one. Yeah, for those who don't know, I mean, this Euclips was an acquisition that I made back when we were private, I guess almost maybe even 3.5 years ago now. It was something it's a great fit for us because it's the same side of it, is not just having the data, but being able to now stitch those pieces of data together. When we look at the world of, as we've seen, couponing with Qples and the whole 8112 initiative that we've seen here, and work with Brandy and team with, you know, once again, it's the same side about verified credentials and measurement, right? The Euclips is a video review, mobile video and web-based review platform. And that's where I saw the ability for us to tie transaction and verifying, in fact, user and a review. I mean, I don't need to go on and give examples of counterfeit, you know, reviews and Amazon and Google, and that people can go on there and search. It's a huge problem. And I think from us, there was something that we were looking to add on to that, of course, when it came to the whole user experience and the value add for the brands. It is something that we've continued to slowly work on. You know, for us, I think one of the biggest assets I think that I get asked of our company is our agility. You know, we have a tremendous amount of horsepower when it comes to now development and engineering. And I can't boil the ocean. For us, I'm very focused on solidifying certain deliverables that play key into next year. And it's something that most definitely haven't forgotten about. As I said, it's one of my early acquisitions and something I am a big believer in, very passionate about. And as we've seen here with all the integration of Pass Creator and Qples and now hopefully upcoming here with Pass Wallet, once we get caught up on these integrations, it is something most definitely that we'll be looking to implement and bring live to market.
There are a few questions about pilot programs, CHL, SOBIs. What are some of the challenges that you face when pursuing some of the bigger deals, or especially government?
Government, yeah, there's a good one. I think, yeah, how do I put this? I think patience. I think one thing I've really learned here in the last, most definitely couple of years is I'm not a patient person by nature. I'm always about on the aggressive forefront and driving business. And, you know, when I do something, I'm all in. right? I never half-ass. I don't like busy. I like productive. And for me, it's about moving the dial, right? So I think it's kind of, and as great as course as I think I am and our team is and technologies, I think I've kind of come to the realization here a bit that, none of those things matter, because a lot of them are, when it comes to government, they're agenda driven, right? And for us, I think it's kind of been beneficial in one way, because it's really helped us shift some of our technologies to be able to build on to the value that capture the interest. And for us, quite honestly, some of the larger groups, most definitely, it comes down to resources, allocation, of course, and budget, but also existing infrastructure. There's a lot of moving parts that are dependent upon not just us, but other groups within their organization, other projects, other pilots, whatever this may be. As hard as I push and to a point of almost, I don't want to say detriment, but the sense of urgency is always there for me, of course, because I have to answer to the shareholders. But I think it's the greatest one is just that. There's a lot of moving parts, and there's a much bigger story than people I can share with most of the time. And a lot of it, I think, is the ability for these groups to, I think, dedicate the resources to not just the cash, but the teams, to build teams, to be able to manage these and execute these as they are rolled out. I mean, understanding too, a lot of what we do, Devin and those at home, is something that majority of these groups have never considered. And a lot of it, we've had to teach them the value and how to do a lot of this. I mean, certain projects that start as one thing evolve into multifaceted development and tech stack integration as part of a bigger play. So, which is great for us, of course, because we're getting further entrenched and embedded into their IT infrastructure and plans. The downfall of that is nothing happens as fast as everyone likes. And, and just simple fact of the matter is that a lot of this is out of our control. And, for us, like I said, there's not a shortage of opportunities. I also sometimes have to put my eggs in, a different basket, moving at a different speed to be able to manage all of these ebbs and flows of timing and allotment on our side as well. The one thing that I can state is that we've now, I guess, secured some of the critical components to, implement some of these in the early new year. And that comes from the inventory piece of the Fobi 3.0. A lot of the functionality of which we introduced with our smart tap device, we've now incorporated that into one device. We've unified the technology and the output of the application. So if you can imagine from a retail perspective, eliminating hardware, we used to have two devices to be able to do some of these things. We now have a single device. We've taken the ability now to capture all of the scan data as well and plug that in. So a lot of it was on us. A lot of it is based upon ask, of course, for other things. Cupils will play a big part of that for us as well in moving forward. So hopefully that gives some insight, but government, I would say, is government beats to its own drum. And, let's just perhaps leave it at that. I think some of it is great to see what they're trying to do, because it's where we're kind of leading the way. And sometimes it's this case of you can lead a horse to water, but you can't make it drink. Our part of our problem, I think, here in Canada, we've had a lot more success in a lot of these early implementations, early, adoption and embrace of our new technology, is because we seem to accept a lot of things here, and it's usually the public outcry and demand for change that's when change comes. A lot of people don't like change. It's hard to get these big corporations to change the way they think and do business, because when people change, when change is made, people get fired when it doesn't work out. Safety is a big part of government decisions, right? And for us, we just continue to do what we do. And like I said, we're not going anywhere. We're evolving what we have each and every day and blazing new trails. And, you know, I can assure you now that at every level of government, people know who Fobi AI is.
You touched a little bit on Fobi 3.0 in that last question, so I'm going to add this one on now as well. Is there a need for 3.0, or is the need for 3.0 the reason for some of the pilots not rolling out yet?
Yeah, for sure. Functionality wise, like I said, it was some of these, you know, projects, it's very clunky, it's very cumbersome. You know, how do you put, whether it's at a door or at a concession or till, adding additional hardware in a very limited space is very, very challenging. So being able to consolidate this, I mean, Tamer and our engineering team done an absolute amazing job on building this out, as I said, and securing the inventory for the components needed. We literally have taken, you know, basically 3 IT components and rolled it into one functionality in device now. So this is a huge part of the market for us for next year. Everyone, I can assure you, is always looking to consolidate all of their various elements within their ecosystem. So this is a big part of what we do is, yes, we can connect and enhance all your existing IT infrastructure, but also now we can consolidate all of these things. We can provide one dashboard and insights portal as opposed to half a dozen, right? We can now give them access to loyalty in real time where they haven't had these abilities before. So like I said, for us, it's not, nothing happens overnight. We are 100% focused on building out to the needs and requirements and asks of our potential customers and partners. We will continue to do so.
There were several posts going around this weekend about the use of checkbacks at the Sammy Hagar residency. Global Entertainment is obviously a large player in the gaming and entertainment space. Is there an opportunity to expand on this?
Yeah, I think it's part of it too, is you know, obviously we don't announce everything we do. You know, there's certain instances where, you know, events happen, they kick off before we can, I mean, before we can get their legal and marketing to agree with it. This is once again the ability we get. You know, the biggest challenge people have right now is rolling out things, whether it's gaining, you know, access to inventory, to be able to fulfill it, as we've all seen. It's, you know, months, now years to order automobiles and whatnot. So the whole global supply chain, these are the challenges that people are facing, the real challenges. How fast can I get something rolling so we can ensure and make sure that what we have in the pipeline is going to come to fruition? And this was the case of Golden. They had an immediate need that we addressed. We were told, and we are being told, in the US and obviously other countries, but we have the best solution when it comes to health passport. For us, it's irrelevant. It's all part of our venue management platform. We've built all these other microservices to plug in to solve the pain points. You know, we don't just sit at home and, you know, write on white napkins and we're having a beer with our friends and employees. What are some great ideas here? We solve problems. That's what we do. Like I said, technology has no value unless you solve a fundamental problem. Right now, COVID, digital transformation, whatever we want to call it, we've seen a tremendous amount of strain, stress, and pressure put on these various venue and retail operators that are being driven to mobile first technologies. And whether it's access and entry, whether it's employee digital IDs now, these are the things that we're building and solving. And Golden, yes, is a huge, huge opportunity for us. It's a group that I've spent a lot of time with and my visits down there, and they own a tremendous amount of various assets, and they're all looking to transform their business digitally to create one thing: better user experience, better access to data, better understanding of the customer. Just so happens it's what we built our whole fundamental model on.
Building off that question that you just answered there, you also mentioned previously that in 2022, Fobi will be expanding into Asia Pacific. Would your focus be in a specific country?
Yeah, we've got several projects right now that we've been brought into in the APAC region. Careful how far I go here, but I think when we look at our own backyard, some of the challenges that we're seeing right now is, of course, as a result of COVID, there's been some, I guess, longer sales cycles, if you will, simply because businesses have been shut down. You're coming into seasons, of course, Christmas coming up here now. So we've been pretty actively looking at dipping our toes into some of the APAC countries, of course, in China and Japan, and some interesting opportunities out of Australia that we're seeing and being brought into. I think when you look at value, I think that's really where we're seeing tremendous opportunity in these regions, because a lot of them still have a lot of antiquated legacy data warehousing practices. They're all looking how to automate their data. And we're talking like Fortune 100 and 500 companies here. We're not talking about the little mom and pop shops on the corners, or the dirty, the little kitchen on the corner there. These are large Fortune 100, 500 companies. And I think for us we're still learning about, quite honestly, what we have. And like I said, for us you can't gauge the need or the success of what we're doing, whether it's here in Canada or the US. We've seen tremendous now growth in the UK and in Europe in the last couple of quarters here. And I think it's something that we need, and I will continue to do, is explore these other regions, find and define the points of value. And for us, look to align with the right strategic groups and resellers or tech partners, whomever that may be, then to look at other potential acquisitions that we can, entertain the idea of taking on to help grow scale in those regions and stand up operation. It's easy to, everyone wants to grow a business, of course, but I think that when we look at the reality here, you need to ensure that you have the resources in place. You need to ensure that you've got, not just from a cash flow perspective, but it's all about people. Business is all about people. Why people love doing business with us? Because the speed and professionalism about all of our professional services and managed services. And that goes back to, like I said, the most important team that we have put in place here. I'm very proud of that team right across our complete company.
Are you able to discuss a little bit more about the team that we have?
Yeah, we've got great balance and support, I would say. Very important for me for leadership is, my team will attest to, is communication, transparency, visibility, and passion. If you're not passionate about what you're doing, you're not going to be with us for very long. And like I said, for me, it's simple reality now. I mean, it's the same side. I give everyone the shirt off my back. I'm a book. It's pretty easy. You get what you get. You either, you like it or you don't. And, sometimes things work out, sometimes they don't. But one thing I'm not scared of is to make change. I will not accept mediocrity. For me, I'm always looking at what we're doing, what we need to tweak, how we become better. Of course, me being a little bit older in age, sometimes it's a bit challenging with the younger generation, not hurting feelings and taking a more subtle approach perhaps, but it's all part of it on both ends, right? For each day we look to be better. And as I said, at the end of the day, I've made huge investment into our team, not just for, now, but for next year. And I think when I look at it, for me, it's about future execution. I have 100% confidence in my team. And like I said, at the end of the day, I have 100% confidence in myself and what we're doing. And when I look at next year, where we'll grow, the marketing services, the professional services will become a very big part of our revenue path as well. And we have those things in place now. You know, we've made a lot of great strides. Of course, we've got a lot of critics along the way, which excites me because people don't care about mediocrity. You know, a lot of voices come to the table when people see success, makes them uncomfortable. They don't like it, whatever their agenda is, don't really care. But for us, it's about focused execution of our entire team.
There's a few questions and comments on here about negative comments on message boards. Over the last 2 to 3 weeks, there have been a notable increase in the amount of bashers and number of derogatory comments that have been posted across the various message boards. What is the reason for this and why?
What is the reason for this? Yeah. Look, I mean, I don't read the boards. You know, I get screenshots sent to me once in a while, and some of it's pretty funny. Like I gotta admit, I mean, you can't make half the shit up that people send to me because it's just so out there. Like, yeah, I just got off the phone with Rob and he's being acquired by Amazon. Really? Is that something that I'm gonna see? You know, I've had people take liberties and post fake accounts. I find it hard to believe that, you know, people believe this stuff. Maybe they do. I guess, I don't know. But for me, Dev, at the end of the day, you know, if you're worried about what people think, you've already lost. Like for me, you know, obviously when you're a young company and blazing new trails and raising money and, you know, like this was my first capital markets, you know, opportunity. It was a school of hard knocks. I mean, I got my ass handed to me the first 6 months, trying to figure out who's who and what's what and why everyone's got their hand in my pocket and, you know, talking this, talking that. It wasn't until we cut all of that out and eliminated all those people, we started to see success because we started to build all of our own internal practices around IR and, you know, and messaging. So I take it all on myself because it's very difficult. One, I see what, you know, the messages that I get about, like I said, you know, I'll write a book one day and it'll be probably a very entertaining coffee table book. But, you know, for me, I don't get caught up in it. People can say whatever they want. You know, a lot of these people are paid to be there. That's why I don't give a shit, part of my language, what they have to say. This is all, you know, it's an act, right? You really have nothing better to do than sit on a board for 7.5 hours a day and repeat the same bullshit over and over and over? No, right? Much like our share price. Real sellers don't put up 250,000 shares out loud because they want off their position, right? These things are out of my control, right? I do everything I can, as well as my board of directors. And trust me, when I say this, we do everything we can to make all the governing bodies aware to protect the best interests of our retail investors and those that have all their, you know, hard-earned money at the table here. Like I said, whether, you know, a lot of people don't like me, Devin, but a lot of people don't matter either. And it is what it is. Like I said, I don't get caught up in that stuff. You know, I'm going to continue to be me, and we're going to continue to do what we do. And if it makes people uncomfortable or, you know, unhappy that we're going to, you know, succeed, that's their problem. And quite honestly, it's their prerogative. And I said, I do what we do, and we will always do our way.
And then wrapping up here, there's been quite a few questions about forward-looking revenue guidance, potential future projects, and moving forward with the 2022 year. So can the company saw an increase in revenue in your year-end financials? What can we expect to see for Q1 and looking forward into 2022?
Yeah, like I said, I mean, this is why I've always preached, you know, and what I've learned over the years as I get older is patience, right? You know, the company is amazing to me, quite honestly. I was maybe a little naive, but I was quite taken back by the response the last 2 weeks. I understand that people get upset when things aren't going, you know, their way or the right way as they see it today. And this could come from, you know, I mean, revenue, obviously share price, it's emotional. I mean, I don't like seeing my investments go down either, but I've also grown enough to understand there's ebbs and flows and dips and runs, right? I think when we start to look at the revenue side, you know, our last quarter, very minimal revenue, but it was our first reporting revenue, right? So I said, for me, I'm always looking at glasses half full. This quarter, we've seen a multiple of that. And next quarter and continue, we'll see another multiples of those. And like I said, for us, the snowball is just beginning to go down the hill. And like I said before in some other interviews, you know, it was crawl, walk. And that was this year, and 2022 is run. We've never been in better position financially. We don't need to raise money. Everyone keeps asking me when we're raising money. I hear we're raising money. We're not raising money, right? We're in a great position. We have the inventory needed. We have the technology that's needed. We have the resources in team and staffing now to execute. And for us, like I said, we are very clear as to what it is we're going to execute and achieve. Some of these sides of it now, as we start to see revenue contracts ramp up, this is where we'll start to see, to me, tremendous growth. And I expect to see these multiples continue in our coming quarters. We will be giving out formal guidance by end of year for 2022 as to what that looks like and beyond. But right now, like I said, we're just focused on turning our next financials, which will be our Q1 as we're June 30th end of year, in the next coming 2 to 3 weeks. And we'll see another progress as far as revenue scale. And like I said, people don't know who we are yet. I mean, it might sound funny because we've got, you know, we maxed out here at the 500 people, whatever it was, but people don't know who we are. When I speak to a lot of these institutions where I'm focused now in the US and in Canada, 98% of them have no idea who we even are. Very excited to find who we are. So like I said, I have a lot of work to do in front of me this year to continue to grow awareness. And that it will become much easier knowing now that I have a team that can support the need, support the demands, and be able to manage the business. So I can focus now today on growing and evolving awareness for Fobi AI and continue to add value to the shareholders. So I'm focused on.
So that wraps up. We're almost at time here. First of all, thank you to our investors and shareholders for taking the time to submit these questions and listening to this as well. Thank you to Rob and Mark for going a little bit deeper into the financials and the overview of the company. I'll leave it with you, Rob, to kind of sign off and thank our shareholders. This recording will be available on our website. It'll be shareable, so if you need to send it to anybody, it'll be available there as well.
Yeah, no, I just want to thank everyone again for the support. And like I said, you know, earlier, I don't begrudge people. People come, people go, right? And one thing that, you know, continues to drive me is the passion, enthusiasm, you know, some of the love and hate, even if you will. Like I said, I love proving people wrong. You know, for me, it's no such thing as failure. It's always about learning. And, you know, thankfully that we've learned where the market's going and headed. We've now armed ourselves to continue to be one of the leaders in a lot of these industries, such as the mobile wallet and digital wallet. For us, I look forward to a big push towards the end of the year, regaining momentum and beginning to run in 2022. We're going to continue to announce new products, new industries, as we've seen in our entry into the exploration mining in cannabis. We're continuing to push our up list. And like I said, for us, we look to get better every day. And like I said, whether it happens as fast as I want or these people on the message boards or whatever it is want. It, at the end of the day, it is what it is. You know, some things are out of our hands and control, but, you know, understanding for us is full steam ahead.
That's great. Thank you. Enjoy the rest of your day, everyone.
Thanks, Doug.
Thank you.